Yo, what's poppin', man? So I wanted to start this thing right where I add a couple filler videos in here and there. Now the videos are gonna slow down. Unfortunately, God willing, it doesn't. But unfortunately, it's probably going to slow down. So in this video, I read a question which said that my previous 50-minute video, which was about the storyline, was while I answered the question, it was a bit too long. Can you make a video that simplifies it all up? Okay, so this is gonna be the video. Whatever I cover that seems to be more than 30 minutes long, I'm going to consider too long for even my own attention span. And no, that I don't take any offense to that whatsoever. I understand it. Okay, so what I'm going to do from now on, I'm going to produce a couple of shorter videos. They're still going to be long. They're still going to be at least 10 minutes at the very least. But they're going to be shorter and they're going to be more to the point, and it's not going to be about too many, oh, this could happen, that also could happen. No, it's just going to be the title of the video. That's it. So the title of today's video is going to be Storyline Simplified. How do you understand the storyline? Just the rules, point blank, period. That's it. Okay, so we're not going to get into too many like, oh, we can do this with it as well, we can do that, oh, but then if this happens we can counter it using that. We're not going to get into all of that. We're going to save that for the main chunk of the proper videos. Okay, so what is storyline, and okay, let me give you some examples of it, etc. Right? So okay, storyline is simply the movement of price between one time frame and another. So we have one time frame, so let's assume that this is the weekly. We will use the weekly for example. Now before we actually start with this, we want to understand what are your higher time frames. They are the monthly, weekly, and daily. So when we talk about storyline, you need to understand that storyline is only dealing with these three time frames. So even if you're an intraday trader or a swing trader or even a position trader, does not matter. You must understand, or at least write down and be aware of the storyline on each of these higher time frames: monthly, weekly, daily. Sometimes not all, sometimes you won't be able to view this a clear storyline on all three of these time frames. That doesn't matter. Go with what you have. So for example, if you can't get the storyline on the monthly very clearly, no problem. Get one time frame lower, which is the weekly, right? Weekly, and then try and play it based off of that. And just be aware of the monthly, because maybe a monthly storyline could start in the future and you want to be aware of that. Most of your losses will come from not being aware of the storyline. Okay, and of course, incorrect entries, which we'll get into in future videos. All right, so we understand the higher time frames and we understand what time frames we're going to be dealing with storylines for. So now let's come into the storyline rules. So how do you read a storyline, etc. So all you need to understand is that the storyline is the movement of price between one time frame and the next, and the way we initiate, the way we can say that to pay attention to something is when we have, so now we're dealing with the weekly, right? Is when we have a weekly support, for example. Price hits into it, boom, and then all we're doing here is we're waiting for a reaction. Okay, so we're waiting for a reaction. That's the first step. Okay, and this reaction is going to be in the form of a rejection. Okay, so we're going to wait for a rejection. Now, something to make very, very clear. The rejection obviously has to be on the time frame of the support that you're looking at. So let me give you an example. If you see that there is a weekly support, it doesn't matter if it's a weekly traditional support or if it's a weekly open close, it does not matter. There is a weekly support because storylines can start from both the weekly open close. So open close would be something like this, and I've showed you guys this in previous videos. Open close could mean something like this. See, open close over here, it could mean like this. Open close could mean like this, whatever. It can start from there. Storylines can start from there, or they can start from traditional SNR. Okay, in this case, this one's already unfresh because it's been tapped. No worries. That's still an SNR, sell by, right? So again, storylines can start from open close candles like this, hidden bases, kissing candles, whatever you call it, and they can also start from traditional SNR. Now, can a storyline start from a piece of SNR that has already been tested, so unfresh? Yes, it can, but it's not something that is valid in my opinion, and it's not something that you should follow as a rule. We're looking for rules here. We're looking for things to follow, which means that we cannot let any and every excuse come in the way, any and every subjective view or exception come in the way. Remember, exceptions do not disprove rules. There are exceptions to everything in life, but they do not disprove rules. Okay, the rule is that we must have ourselves a fresh zone. So for example, sell buy gets created here, right? And then this is the first week, creates a sell, second week creates the buy. That's a traditional support. And then in the third week, very conveniently and very quickly, actually, sometimes it doesn't take that quick. Sometimes it takes longer, right, to come back. Okay, and price eventually just stations out and boom, comes back in here. And so this is a weekly zone. So what are we going to be looking for? We're going to be looking for a weekly rejection. So just like this, we're on the weekly time frame, we have a weekly support, we must have a weekly rejection. What is a rejection? A rejection is when price, where the candle comes in, taps into that level and closes above it, the body close. So this is the body, this is the wick. The wick hits, the body is here, it closes above it. That's a rejection. Does it matter how long the wick is? No, it doesn't. Does it matter if the wick, for example, wicks through it like that and then still leaves the wick behind? No, it does not matter whatsoever. Okay, let me see if I can find an example for you guys. There aren't too many, but there are enough examples of when price wicks through. So for example, no, all of these are just intact. I think you can maybe find them on lower time frames perhaps. Again, I'm not trying to waste you guys' time too much, but I think you kind of understand what I'm trying to say with this. Maybe there we go. This is one example, a quick example. So you can see over here we have ourselves the resistance, right? Buy, sell candle creates a traditional resistance. Okay, even nicer that there's a breakout here. Sell, buy is a support, break, become resistance. We have ourselves a resistance at the top. See how this wick exceeds the top wick here. See, it exceeds the top. Does not matter. Does the body close below this? Yes, it does. So that means it's a rejection, right? And then within this wick, you may find something on the H4. The reason why we're looking at the H4 is because we're dealing with the daily, right? So again, if you haven't watched my proper storyline video, go ahead and check that out. So yes, first step is the reaction, and the reaction we want to look for is a rejection. The second step is that we want to go one time frame below. Okay, drop one time frame and look for H4 breakout, or drop one time frame and look for a breakout. Okay, we're dealing with the weekly, so we're dealing with daily. But if we're dealing with the daily, we're dealing with the H4. If we're dealing with the monthly, we're dealing with the weekly. One time frame below. So first thing we want to look for, okay, is a reaction. So let me just give you an example right now. Okay, first thing is the reaction. So I don't know, let's say this one. Okay, what is this? This is an open close flip, right? We have ourselves, this is a resistance, and then once this resistance gets broken, it becomes a support. So we want to see. First thing is the reaction. Do we have a rejection? Yes, we do. We absolutely have a rejection in this candle. Okay, so that means we need to wait for this candle to close, and then we're going to attack on the next candle. So this is the next week that starts. Now, in this next week that starts, we're going to observe the PA, they call it, the price action in this previous week's candle, or just in the candle that rejected the SNR zone. Okay, so let's go ahead and check that out. Now, which time frame are we going to be observing that PA on? Very important. We're not going to drop to the H4. This is on the weekly. We're not going to drop to the H4. We're not going to obviously go to the monthly. That doesn't even make logical sense. We're not going to go to the H1. We're going to drop one time frame and look for a breakout. What's one time frame below weekly? Daily. Hit the daily. And now, as I said, we're going to observe what's the PA that happened on that previous week. You have to understand. Again, let me go back to the weekly. This is the week that tapped and rejected that weekly zone. This is our new week. In our new week, we want to see what happened the previous week when it did reject that zone. Okay, was there a daily breakout? Was there a daily early entry setup? Right? If you guys don't know about setups, go and check out my video. I think 2 or 3 videos back when I talk about, check the video where I talk about entry setups. Okay, so what are some of the entry setups? So some of the entry setups could be based on the storyline, right? Where you have yourself a daily reject daily and a H4 breakout, for example, and then you enter that based off of a storyline confirmation. Another thing you can do is enter based off of an early entry, like this one. I'll show you an example right now. A weekly reject weekly. So what do? We want to drop down one time frame and look for a breakout. Now you need to understand, why are we looking for a breakout? Why do I say step 1, we have a weekly zone, weekly reject weekly. Step 2, drop down one time frame. And in step 2, why are we looking for a breakout on the daily, on that one time frame below? Why are we looking for a breakout? Because if there were to be a breakout, right, that would confirm a weekly bullish storyline. Okay, so let's see what happened here. Weekly rejected weekly. This is the week that we're looking at right here. This is the rejection that happened on the weekly. Now we're checking what happened on the daily. Oh, but unfortunately there was no breakout that occurred. What would the breakout have to be? Would have to break this. Correct? Open close breakout is not sufficient in my opinion. You will see more failures happen when you consider an open close as a breakout for a storyline start. Okay, it is not strong whatsoever. We want to see a traditional SNR break that is strong. Okay, so but we do have ourselves the early entry setup. So as a result of the weekly reject weekly, what did we create? Okay, we created a traditional SNR, but unfortunately it had already been tapped, you see, by this candle right here. This candle comes in, sell by, that's support. This candle comes in and taps it. And you see how even though there's a long wick, it's still considered tapped into it. See, this would be fresh during that week. This is still, you wouldn't be entering anything in here based on the weekly because you're still waiting for that weekly to finish rejecting. Okay, once that weekly is finished rejecting and closed as a rejection, so that's the first week. The second week, you come back and look at what happened on that first week, that week that touched the weekly. Oh, we see this. Okay, this one is unfresh, but there is an open close that we could try an entry from. Okay, so we hit over here on the daily, just like that. Oh, okay, there's a fresh zone, open, close, and then we refine that daily to the H4 because that's where we enter from. We enter from the H4s. Okay, and then we would, again, I do not want to waste my time going into entries, but hopefully you get the point, right? We have that, this one didn't touch. Okay, maybe left shoulder, yeah, left shoulder right there, and then we would want to refine it to the H1, and this would be the setup based on the weekly. Okay, nothing there fresh on the H1, so we would just go with the H4. H1 is for our entries, and higher time frames obviously for our storyline and direction. Okay, and of course for our key levels. They call key levels based on multi-time frame. Multi-time frame is the second video I uploaded, so again, if you guys are confused about what I'm talking about, I'm not going to explain it here. I'm trying to keep this very objective, very to the point. Okay, so yes, that is how we confirm a storyline. How do you confirm a storyline? You wait for there to be a rejection on the appropriate time frame. We're dealing with a weekly support like this one. We're dealing with a weekly support. Then obviously you're going to wait for a weekly rejection. How do you confirm that there's a weekly storyline that started? Well, you would look for a daily bullish breakout. Now, another thing, 2 other questions we want to go through. Let's see the time on this. 11 minutes, no problem. This can be up to 20 minutes as long as it's concise. Now, what happens if we have multiple rejections in the same area? Okay, so I'm going to give you just a very recent, this is the same example that I've been using for the past couple videos as well, but it's a very recent one, which is why I thought, it would be helpful for you guys because it's very recent. It happened quite recently. Okay, this one right here. So what happened in here, and the reason why I don't want to use this is because there's nothing that rejected over here. This was a weekly setup. But anyway, we have ourselves a monthly open close. Price comes in, taps it on the first time, taps it on the second time, taps it on the third time. Avi, how do you know which one is fresh? When is it fresh? When is it unfresh? Now, when price heads in here on the first attempt, the reason why a zone becomes unfresh is because price has started a storyline from it. Now remember, the zone we're talking about is obviously on higher time frames, daily, weekly, monthly. So in this case, we have ourselves a monthly time frame. Price heads in, taps it on the first attempt. What do we need to see on one time frame below for us to say, oh, monthly bearish storyline has started from the zone? What do we need to see? We need to see, first of all, we need to see a monthly reject monthly. Okay, that's happened, we know. But what do we need to see one time frame below? We need to see a weekly bearish breakout. Well, when we hit the weekly, there isn't anything. This was that first month's touch. There isn't any weekly breakout whatsoever. Okay, there's a weekly sell setup, just a resistance created there. That's a different argument that we're talking about. That's a completely different discussion. Okay, was there a monthly bearish storyline that started from this? No, there wasn't. Okay, let's go to the second month. Second month, long wick. Oh, there must have been a weekly bearish breakout. Let's go and take a look. No, there wasn't. This is still the second month. There was, again, the same setup over here. There was one same monthly setup over here. High risk early entry setup happened over here. But was there a breakout? Absolutely not. Okay, based on the candlesticks, right? So again, this is up to your rules. So was there any breakout on the weekly based on traditional SNR? No traditional SNR break. If your rules say, if you want to incorporate open closes as a break, by all means go ahead and do it. I wouldn't suggest that for beginners. I use that, but I wouldn't suggest that for beginners because it's not a very high win rate until you understand a certain something else that I'll share in the future about open close breaks and using that to confirm storylines. Okay, but the point of the matter is that both of these months, even though they touched and they rejected, right, they never had a weekly bearish break. And because they never had a weekly bearish break, we cannot say that a monthly bearish storyline has started. And if we cannot say that a monthly bearish storyline has started after the rejections of this monthly open close, right, this monthly open close, if we cannot say that a monthly bearish storyline has started because there is no weekly bearish break, we can still say that this is a monthly resistance that is holding at the moment. It's holding price at the moment, right? The time when we would say, oh, okay, that's long gone is when, for example, the monthly candle closes above it, right? That means it's long gone. Why is it long gone? Because it's broken the damn zone. Okay, so because it's broken the zone already. So, like this would be a break. Buy, sell, resistance. But here, prices comes and the candle closes above it. That's a break. We wouldn't consider this zone anymore. You see? Now let's see on this third month. On this third month, is there any weekly bearish break? Finally, on this third month, we break sell buy. This is the thing, right? We break the traditional SNR that created the high. Okay? Or in this case, if you want to be a bit more modern with the SNR, this is not the way it's traditionally done. But anyway, if you want to be a bit more modern, basically there's a breakout, right? We have ourselves this pattern. Okay, so as I said, for a beginner, you probably don't want to be creating new things or going to new lengths first. You want to master the fundamentals. So point of the matter that I'm trying to prove here is that in the first 2 months of price touching the zone and rejecting the zone perfectly, beautiful rejections, there was no weekly bearish break. And because there was no weekly bearish break, we couldn't say that a monthly bearish storyline had started from this. And because we couldn't say that a monthly bearish storyline had started from this area, we can still say that this area may be able to hold price. And then finally on this 3rd month when price rejected, we had ourselves finally that bearish break. Right over here, or if you're more old-fashioned, over here. This is the proper one. Why is this the proper one? Because this is the original traditional SNR that created the highest high that tapped into this zone. The highest high that tapped into the zone. Okay, that's why I would say this is more proper in terms of the word proper. Okay, and so yes, that is how you would confirm, you would see multiple tests of the zone. How do you know when it can start to move? Well, once you start to see the signs of the storyline starting. Okay, there are tons of examples of this as well, by the way. So another thing that I wanted to also go over would be the obstacles in a storyline, the obstacles and the entries in the storyline. Now, the time frame that you find the obstacles and the entries are the same time frame. So I'll give you an example. Let's assume you have yourself weekly to weekly. Okay, price is hitting boom, 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 boom up here, for example, right? Whatever, it doesn't matter. Okay, the obstacles that you may have, okay, that cause these turns in price will come from one time frame below the storyline time frame. So your obstacles and your entries come from one time frame below. Same thing. So one time frame below what? One time frame below the storyline time frame. That's it. Really simple. Your obstacles and your entries in a storyline come from one time frame below the storyline time frame. So what's the storyline time frame in this case? Weekly is what we're dealing with. So the reason we'd be playing with weekly is maybe because you're a swing trader, or because there's nothing clear on the monthly, or you don't prefer to wait for the monthly. Those are all valid reasons to play from the weekly. Okay? But again, if there is a monthly storyline, you must be aware of it. There's no like if, ands, or buts. There's no like, oh, it's okay, it's just subjective. No, you must know. If there is a monthly storyline, you must know that that is the case. Okay, because it allows you to plan. Anyway, obstacles and entries come from one time frame below. What's your time frame for the storyline? Weekly. What's one time frame below weekly? Daily. So you should be aware of daily resistances and supports. Now, here's another question you may ask. Avi, in terms of the obstacles, right? Okay, entries, we know we should be entering from daily fresh levels. So let's say we have weekly bullish storyline, right? So let's say we have a weekly bullish storyline up here. See, weekly bullish, weekly reject weekly, and there's a bunch of stuff here. Daily breakout, for example. Let me just give you an example of this, right? So for example, daily breakout here, daily breakout here, whatever the case may be, right? We know, okay, entries, we should be entering from a daily fresh. But Avi, what about obstacles? Should we be aware of obstacles that are unfresh? No, you generally do not have to bother about any obstacles that have already been touched in the past. They would usually be run through. Exhibit A. Exhibit A. Right? Now, I know even over here is fresh, but it still ran through. Right? Exactly. That's the whole point I'm trying to make. See how it ran through? There was no rejection to stop it or anything like that. Over here, the reason why price stopped is because we created ourselves a weekly support, and then we had those multiple rejections, multiple daily breakouts. Price faked out a little bit over here, but that's what you should expect from a reversal. Okay? And so yeah, that's pretty much it. That's pretty much what I wanted to show you guys. So well, your entries are going to come from one time frame below, and your obstacles are also going to come from that exact same time frame. Okay? Now, while that is the case, you should pay more attention to obstacles that are in line with storyline time frame or HTF. Now, what does this mean? This is very, very simple to understand, my friends. This is very simple to understand. Remember how I told you that the obstacles would come from one time frame below. So you already know entry, okay, weekly bullish storyline, entry daily, monthly bullish storyline, entry area from the weekly. Again, weekly as in you multi-time frame it with lower, no one enters from the weekly, right? You know all of that. But obstacles, I also told you, obstacles one time frame below. Monthly bullish storyline, weekly obstacles, weekly bullish storyline, daily obstacles, correct? But pay more attention to, for example, weekly bullish storyline, right? Pay more attention to the weekly bullish storyline that has the obstacles on the daily, but that daily obstacle is also in line with a weekly resistance, or the daily obstacle is in line with a monthly resistance, right? So I'll try and give you an example over here. I'm not sure if I can find one right now, right? Over here was a monthly. Here there was no weekly whatsoever, but I think there was a daily. Okay, cool. So pay attention to this one real quick. So if we were to look at this, we give you a horizontal ray. Actually, this is a beautiful example, right? We have ourselves two resistances on the daily here. We have ourselves a buy, sell, traditional resistance that is unfresh because it's already been tapped. Okay, we can ignore that. We have ourselves another daily resistance here in the form of open close, okay? And we have ourselves a sell, buy, support, break, become resistance, daily resistance here as well, right? Now this daily resistance right here is in the exact same location. So we're gonna go and write this down, right? It is in the exact same location, not with a weekly, because the weekly is above, right? It's not in the same location as the weekly, but it is in the same location as a monthly. I'm gonna write that down here too. Daily, monthly, right? And so now here comes the example, right? Let's just assume for the sake of an argument, right, that this entire run up here, let's assume for the sake of argument that this entire run up was a weekly bullish storyline. It wasn't, but let's assume that that was the case, okay? Right? Weekly bullish storyline. So what are your entries going to be? Your entries are going to be daily. We all know that answer. Your entries are going to be daily, okay? That's very easy. But your obstacles are going to be from where? Your obstacles are going to be from daily as well. So your daily obstacles, fresh ones, you know, this is unfresh, so you can expect it to run through. This one's fresh, so you know, pay a bit of attention here, right? Pay a bit of attention to the entry levels that price may give you or not give you, because that one missed, right? All of these things, pay attention to it. However, when you come across a daily obstacle that when you go to the higher time frame also coincides with a higher time frame, be more cautious. That is where price would probably have a huge volume from. Maybe it could have, right? So these are obstacles that you want to pay more attention to. So that's basically it, guys. We've covered exactly the steps to identifying a storyline. Okay, we've covered the steps. So I hope you guys understand. So again, just to revise the steps alone, there's nothing to do with setups, etc. Let's say you have yourself a daily resistance. You would want to see the first reaction, which is the daily reject daily. After that rejection has happened and after the candle has closed, you want to see one of two things. The first thing, the preferred way, is that you want to see as a result. So as a result of this candle's rejection, you want to see a H4 give a breakout. So in this case, it did give a breakout. You can see that very clearly, the little QM there. This is the preferred way. So what's the preferred way? The preferred way is when you have yourself, for example, a daily reject daily, and then the next day. So let's assume Monday rejected a certain resistance, and then on Tuesday you go and check Monday's price action. So this was Monday, let's assume, right? And this is Tuesday, all right? And you go and check Monday's price action. Oh, Monday reject Monday, weekly, daily reject daily, and there was a H4 breakout as a result of the thing. So that's the first way that price can break out. That's the preferred way. But also, if price rejects after the fact. So if price goes something like this, so price rejects on Monday, right? And then price does something like this, okay? And then Tuesday, price breaks down here. So it's not, so the H4 didn't break as a result of the daily reject daily. The H4 broke later on, during the process, later. That is also another way that you can confirm. As long as we have the traditional SNR that caused the spike into it to be broken with a candle body, that's what considers a break, that's what constitutes a break. As long as we have that, we can consider that there is a breakout. Okay, and if there's a breakout, for example, on this H4 after daily rejected daily, we will say, okay, daily bearish storyline has started. Okay, now I've given ample examples of this in previous videos for the SNR, so you're gonna have to go and check that out if you're still in doubt. All right, and another question that we've also answered is what happens when you have multiple rejections in the same area. You want to pay attention to when the storyline actually starts. Okay, you want to pay attention to when does the storyline start. All right, so if we have, you know, like I said, multiple rejections, you know, for example, maybe like this over here, this first candle heads up into the OHLC, weekly reject weekly, but then immediately, just straight away, we already have a breakout. See, this is an example. This is an example of how weekly rejected weekly, and as a result of weekly rejecting weekly, we never had a breakout on the daily. We just had a daily new resistance. But then later on in the coming days, eventually, day 1, 2, 3, 4, eventually we broke that traditional SNR, that significant traditional SNR. This is an example, that second example of the not so preferred way, but it's still valid, of how you can confirm a weekly bearish storyline or any storyline whatsoever. First way is preferred is when, for example, weekly reject weekly, and as a result of it, boom, it just straight breaks as a result. So the second week, you just already see a break. Or it can be in the second week, it then breaks it in the second week. Fractally, it's the exact same thing for a daily, right? Or for a monthly, it's the same thing on every time frame. Whatever example I give you for one time frame can be used and carried forward to another higher time frame. Okay, and yeah, over here you can see it already broke out, so you can just start playing from dailies, and you can see how price is very reactive from these dailies, right? This price reacted from this daily, price reacted from this daily, even from this daily. God damn, right? And then after that, all of this is tested. See, this one's tested with this one's tested with this one's tested with this. Price reacted from something in here. I'm not sure what exactly, right? But price did react, and you can expect, if you're taking sells here, you either hold it or you take some of your profits along the way, because you can't be selling in any other daily in here. We're in a weekly bearish storyline. All of these dailies have been tapped already. So if price were to go up, it's probably going to cut through all of these things, right? So the reason price actually went up, you can see this is a weekly bearish storyline, correct? Weekly bearish storyline. And guess what you can see over here? We can see that we've created a sell buy, daily support. So daily support is what? A direct obstacle to what? Weekly bearish storyline. Weekly bearish storyline. A direct obstacle that you need to be concerned about or pay attention to is going to be the daily time frame. And we created that. Price comes in and flicks off. Okay, and when it flicks off, this is where you can counter, but you should not be looking for sells in here. It's dangerous because all of these zones have already been tested. So the next possible area would be these two areas right here. Okay, and how do you reduce your risk? Well, get your line up. So you get your line up. How do you reduce your risk? You get your line up. This is about the operation of time frames. When price comes in, you wait for another daily reject daily. So you can have a high risk entry in here. You refine this daily, H4, H1, you take an entry in here. Next day, you see, oh, daily reject daily. Once this daily reject daily, you go into your H4 and you look for a little setup in here. What do you have? You have yourself a setup in here. You have yourself a setup in here, right? All of these things. I'm sure there was a H1 there. So again, don't get confused. Now I've answered all of your questions for storyline. Play this video again multiple times. Thank you so much for watching. Have a wonderful day.